Welcome to Forkast IQ. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3 crypto and data. I'm Forkast's editor-in-chief, Angie Lau. Okay, let's kick off with the latest on FTX founder Sam Bankman-Fried. Now, on Tuesday, SBF, once the darling of the crypto world, as we know, pleaded not guilty to a set of new charges tied to the collapse of his crypto empire in November of last year. U.S. prosecutors had filed a new indictment against SBF on 7 counts of fraud and conspiracy last week. Those included the accusation that SBF stole customer funds for political campaign contributions before the 2022 U.S. midterm elections. SBF was arrested in Bahamas in December of last year on a multi-billion-dollar fraud charge related to the failure of the FTX exchange. Charges, multiple there. And another criminal indictment to tell you about. Tornado Cash co-founders Roman Storm and Roman Semenov have been charged with money laundering and sanctions violations in the U.S. Now, this development came after the FBI said that North Korean hackers, including those who used the Tornado crypto mixer for money laundering, were looking to cash out stolen Bitcoin worth $40 million US. Now, Storm, who's American, was arrested on Wednesday in Washington state, while his business partner, Semenov, a Russian national, has yet to be taken into custody. Storm's lawyer, Brian Klein, said that the Tornado Cash founder disputes engagement in any criminal conduct and has cooperated with the prosecutor's investigation over the past year. All right, next, a stable rise, you could say. Stablecoins continue their hot streak. Coinbase Global, the company behind the largest cryptocurrency exchange in the U.S., announced that it is acquiring an equity stake in Circle Internet Financial, the issuer of the USDC stablecoin. In a statement, Coinbase said the nature of the investment means that Coinbase and Circle will now have even greater strategic and economic alignment on the future of the financial system. Now, the announcement did not mention the size of the equity stake Coinbase has purchased in Circle, but USDC will also launch now on 6 new blockchains between September and October. So a lot of momentum coming out of that team. And that will bring the number of USDC-supported blockchains up to 15. USDC, by the way, is the second largest stablecoin in the world after Tether's USDT. The dollar-pegged token had a total market capitalization of over $26 billion US as of Thursday afternoon in Asia. All right, moving on to the latest from Hong Kong now. Hong Kong Virtual Asset Exchange, or HKVAX, has become the 3rd licensed crypto operator in the city. That's big news here. HKVAX shared the news last week saying the Securities and Futures Commission, or SFC as we know them, granted the exchange an in-principle approval to carry out Type 1 and Type 7 regulated activities. Want to find out more? Well, we certainly did, so we reached out to HKVAX. And joining us right now is Matthew Chung, HKVAX Chief Strategy Officer. Matthew, welcome to Forkast. Really appreciate having you here.
Thanks for inviting.
All right, I want to ask you, Hong Kong Virtual Asset Exchange, your firm, is now the 3rd licensed virtual asset operator in Hong Kong, along with HashKey, as we know, and OSL. Tell us more about it. What's the journey here, and what are the preparations? What were the preparations for getting this license?
Yeah, it's been a fairly long journey. We actually started the entire conversation with SFC probably around 2018-19 time. So that was in the last kind of crypto winter, I would say. And then at the time, there were a lot of things happening within Hong Kong, and SFC started looking into the space. And the regulation regarding crypto has evolved a lot over the last couple of years. And overall, very glad that we are the 3rd one to receive the approval in principle. And then hopefully the full license would come out by the end of the year, or hopefully early Q1.
So would HKVAX be focusing on retail or institutional clients, or both?
2 licenses would allow us to do both. And we have, in terms of our strategy, we'll be focusing slightly more towards institutional side. Right now, we feel like a lot of these offerings, the products, the suites that we have, it's more tailored to PI and institutional side. So our main focus, I would say 80% or 70% of our focus would be more on the institutional side, and then the rest would be on the retail side of it.
Okay, let's talk about crypto regulations now. We have the US cracking down on crypto and then Singapore releasing their stablecoin framework. Where do you think Hong Kong stands when it comes to regulating the digital assets space?
We've broken into basically two sides. We have one side that's going more and more regulated, which facilitates us in going forward to connecting to any institutional clients or more on the traditional financial side of it. And then the other end, we have more of decentralized, unregulated, super DeFi. It's split into two routes, and it's a very good thing. At the end of the day, what we really need in terms of the entire industry is mass adoption. And both of them, as long as it facilitates on the mass adoption side, then we welcome it. Hong Kong is seated at a very interesting position, with SFC being more clear. Being slightly slower, it's okay. We'd rather do it properly. The right way is never the easiest way. But once we go through it with clearer things happening, I believe it's going to help a lot.
Matthew, appreciate it. Thanks for sharing. All right. Let's dive into the market activity right now with BNB, the native token of Binance, trading at its lowest in over a year as the world's biggest crypto exchange battles increased scrutiny. Now, according to the Wall Street Journal, Binance may have let Russians move funds abroad despite sanctions against the country, and the exchange, well, it's denied those claims. Gracie Chen of crypto exchange BitGet joins in to talk about that and all the big crypto developments this week. And Gracie, welcome to the show. Let's get straight to it.
Thank you for having me.
How will the latest allegations against Binance impact the biggest player in the industry, you think?
As a competitor with Binance, BitGet might not have the best position to comment on BNB nor Binance, but in general, we think Binance is doing well. Although it faces some regulation risk and other risks around the company, still it's number one centralized exchange, and we don't see anyone, taking that position at all or challenging Binance's number one position. So right now, BNB is at low, but it's not a BNB issue. Well, they have regulation issues that they need to deal with. Not just Binance, but the whole crypto industry. We're facing this together.
All right, crypto markets are in red. Bitcoin fell below $26,000. Of course, got to talk about this. ETH dropped down to 1,600. Give us a lowdown. What's going on here?
Well, I myself bought some Bitcoin and Ethereum, especially Ethereum last week. We do believe Bitcoin, Ethereum, and the cryptocurrency price will increase in the next bull market. So right now, it's a good time to invest, but I wouldn't say this is like the absolute bottom period of time.
Okay, I want to bring this up. We talked about it earlier in the show. Coinbase buying a stake in Circle. PayPal's new stablecoin, PYUSD, faces legal headwinds. We got some stablecoin news happening here. What's your outlook for that sector?
PayPal, they have come up with PYUSD, and that's something quite interesting. I myself is also studying PYUSD, and we think it might be able to open up the fiat channel and through PayPal and all their channels, because PayPal have lots of users already. As for USDT, USDC, I believe that USDC lost quite some shares after the DePAG in March due to the Silicon Valley collapse and some other major US banks issues. It shows a little bit of an issue or concern for many users, and that made lots of users switching from USDC to USDT or some other stable coins, or even in general back to the fiat channel, back to the fiat currency rather than holding stable coins. Yeah, so these are all issues around stablecoin, but however, stablecoin will remain as one of the most important asset classes in cryptocurrency other than Bitcoin, Ethereum.
I want to ask you about this here. The crypto community is on the edge a little bit, biting their fingernails, if you will, over another lawsuit. This time we're watching this really closely. A lawsuit between Grayscale and the SEC. Will the SEC grant Grayscale permission to convert its Bitcoin trust or GBTC to an ETF, or do you think that the decision is going to be once again delayed?
Okay. I personally think the Bitcoin ETF might be in danger a little bit because of what happens between Grayscale and SEC. Specifically, Grayscale has written to the SEC saying that if they approve BlackRock's ETF, and they would say this is like a discrimination. So that's quite an interesting case. We're also observing in terms of how it will develop in the future.
All right, thanks Gracie for joining us today. All right, quick break now, and coming up next, more market activity, this time NFTs.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast.News.
Good to have you back with us on Forkast IQ. All right, here's the biggest news in the non-fungible token or NFT space this week. We've got former OpenSea product manager Nathaniel Chastain sentenced to 3 months in prison in the first insider trading case involving NFTs. Chastain was convicted of wire fraud and money laundering in May, and prosecutors said that he used confidential information to trade NFTs before OpenSea advertised them on its homepage. Aside from the jail time, Chastain faces a $50,000 fine and 3 months of home confinement. All right, let's get more stories in the NFT space with Forkast Labs data analyst Yehudah Pesher. Yehudah, you've got some more news about OpenSea to kick us off. All right, let's get started.
Hey, it's great to see you. Well, we can't talk about the NFT market this week without talking about OpenSea's decision to no longer support creator fees or royalties. The world's largest marketplace, they made this announcement last week. As you can see from the Forkast 500 NFT index, the market took a huge hit. Now, OpenSea's decision just accelerates what was already coming, but what you see on the index, well, it's just a taste of what's to come as prices and as value plummets. Already, projects were struggling to find any source of income since the marketplace wars ushered in the low or no creator fees, and that began really last year with X2Y2 and LooksRare, and then it accelerated this year with the entrance of the Blur marketplace. Now with the NFT bear market in full force, projects haven't been able to make money on those royalties, but they also can't sell out their primary sales to raise funds to supplement that lack of creator fees. We saw that a few weeks ago with the Cyberkongs, which ended up cutting their mint short. I've been sounding that alarm for a while. People are completely tapped out. Now you have creators questioning if their attention should even be placed in the NFT market during this bear market especially. And it's not just impacting PFP projects, it's artists too whose sales have come to basically a standstill. This is exactly why Yuga Labs came out and said they're going to work to have their NFTs no longer be tradable on OpenSea. And Mark Cuban even came out and said OpenSea's decision was a huge mistake. Some feel that this is going to lead to the end of OpenSea. I actually think they'll reverse their decision, but really, we'll have to wait that out and see what happens. But look, focusing on sales as a measure of the growth of the NFT space is a huge mistake. And I say this daily. I say it to anyone who will listen. Last week, we saw a record high number of transactions in the NFT ecosystem. I'm talking ever. We recorded 3.7 million transactions. That's across blockchains last week. Our previous high was the week of February 14th, 2022. Back then, we saw 3.2 million transactions. That was with 36% more sellers and 67% more buyers. Now, if you do care about the profit side of NFTs, obviously it's struggling tremendously. Profits last week saw sellers on the losing end of trades to the tune of $9.4 million, and average sale prices fell to $26. You got to scroll all the way back to August of 2020 to see those numbers in the market previously. that low average sale price being driven by high ticket NFTs that are being sold at big losses now. Look at Bored Ape number 8585, recently sold for $255,000. That's 153 ETH. But zoom out and you see that it last sold last year for over $1 million at 777 ETH. Huge loss. So the writing's on the wall here. Prices have been unrealistic. Sellers right now are taking any liquidity they can find in the market before it's gone entirely. Those average sale prices, really, they should be $5, it should be $10. Look over at DMarket, look over at DraftKings for two examples of what realistic prices look like. But the days of most NFTs in multiple collections being worth tens of thousands of dollars, it's gone. Now, this down market, not just impacting traders, look at projects like Recur, who announced last week that they're closing up shop. Recur brought us Nickelodeon NFTs like Hello Kitties and Rugrats. And a project like that closing down, unfortunately, just makes sense. Putting out NFTs at $100, but with the supply of, 10,000, it just doesn't work, especially in this market. And in PFP projects like the Cool Cats, you're seeing a similar effect. Their co-founders leaving the project. There's probably a million reasons that he's leaving. I don't want to blame it on the bear market. We're going to start seeing this phase of team members from big projects leaving. I know of multiple projects that will be shutting down shop throughout the end of this year, early next year. So watch out for that for the rest of this year. And finally here, look, it's such a tricky market out there, but we're still laying the foundation for the NFT scene to grow beyond anything we've seen yet. I remain very optimistic about NFTs. Let's just get through the next few years, and there's a much brighter future ahead for the NFT space. That I'm sure of.
Couldn't agree with you more. Yehudah, thank you. All right, on that note, let's take a quick break, and we're going to focus on the royal decree that moves United Kingdom toward regulating crypto on the other side of this break. Stay with us.
Forkast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast News.
Welcome back to Forkast IQ. Now to the UK, where earlier this summer, newly anointed King Charles III granted the Royal Assent to the Financial Services and Markets Bill that grants regulators more powers over the financial services industry, including, crucially, digital assets. The UK has been calling for greater regulation to push the nation's crypto conversation forward. So, what next for the country now that the bill has passed? Over to one of our resident Englishmen, Forkast editor Will Fee, to find out just what the King's approval means for the UK's digital asset industry.
Jurisdictions throughout the world are vying for top spot as the new global crypto hub. While much of the spotlight is shining on Asia, as economic heavyweights Singapore, Hong Kong and Japan accelerate their own Web3 regulatory regimes, the long history of capital city London, first as a traditional finance hub and then a fintech leader, means that the UK's efforts to clamber to the top of the pile are hard to ignore. The UK's chief financial regulator, the Financial Conduct Authority, or FCA, the Treasury and the Bank of England now have a much more solid mandate to oversee the national growth of the industry with the passage into law of the Financial Services and Markets Bill, or FSMB, on June 29th.
The Financial Services and Markets Bill provides for three things, basically. The regulation of stablecoins to be brought into the existing regulating perimeter. The regulation of financial commodities is also part of the bill named. And then a future scope for HMT and the FCA and make a big one to look at how they will bring in the regulation of the rest of crypto assets into the regulated perimeter. And what that does is signal that this is important and that this work will continue forward.
While policies around the underlying tech remain uncertain, the passage of FSMB has at least allowed the UK digital asset industry to take a step closer to the stated aim of Prime Minister Rishi Sunak to make the country a global centre for Web3. The Prime Minister, a former hedge fund manager, is a long-term backer of the crypto industry. He first began to push for the UK to embrace digital assets back in 2022 as Chancellor of the Exchequer under then Prime Minister Boris Johnson. In April of that year, the Treasury under Sunak asked for a non-fungible token to be produced by the Royal Mint, which Labour opponents criticised as a vanity project. The NFT plans were subsequently dropped, less than a year later in March 2023. Sunak's appointment as Prime Minister in October last year was hailed by crypto proponents. But in the midst of a national cost of living crisis, spiralling inflation, and turmoil at the top of Sunak's ruling Conservative Party, there is a sense that he may not be long for the job. The main opposition Labour Party, led by Keir Starmer, are polled to win the next general election, which is expected within the next 18 months. And despite positive noises emerging from some figures in the party, it's still less than certain how the Labour leadership view crypto.
Well, definitely the politics have been a driver in the UK, and we have had a pro-growth, pro-innovation, conservative government. That's not to say that Labour is not also pro-growth and pro-innovation, but sometimes priorities can be differentiated. So we're still waiting to see what the Labour Party's mandate will be, and I think that'll come closer to the time of the general election.
For advocates of the digital asset industry advising policymakers on crypto, there is a pressing need to abandon partisan politics if the industry is to be allowed to grow in a way that is both safe for consumers and beneficial to the wider economy. According to a recent FCA research note, over 90% of UK adults had heard of cryptocurrencies, with 1 in 10 actually owning a crypto asset. Coinbase is the most popular crypto exchange for UK investors, with Bitcoin and Ether the largest crypto held by value.
I think there are people who are in the UK who are engaged in this sector right now. It is imperative that there exists as a system where they have clarity about what it is that they need to do to ensure that they can build businesses in the UK. They can hire people, and as the businesses grow, they can hire people in the UK.
But building a crypto business is easier said than done, as firms struggle to access basic services. Digital asset firms, even those registered in the UK, are finding themselves pushed out of the banking system. Can the UK's traditional financial systems cope with demands of a new age financial system? Could a rethink of the legal system help provide clarity to make participants feel safe? The Law Commission for England and Wales released a report on digital assets on June 28th, recommending reforms to personal property law.
There are all sorts of ways in which digital assets are quite distinct. What lawyers call sui generis. They have their own rules, and why not? We're at this point now. It's definitely, I suppose, with DLT, a real technological sea change. So why not have a legal sea change to match it? I think that's really where we ended up.
The ongoing paralysis of the crypto industry in the US, defined by the various lawsuits brought against the country's exchanges by regulators, suddenly opens up an avenue for the UK to lead in the digital asset space. And just how big is that opportunity?
The UK is already trying to capitalize on it, right? If you listen to some of the hearings in Congress, they reference the UK as well as other jurisdictions in terms of jurisdictions that are actually moving forward with putting in frameworks in place for this sector. So I think it is a huge opportunity for the UK, but as I mentioned, the details matter, and the details around how they're going to do it from a market's perspective, how they're going to do it is not there yet.
One area that is yet to see the wrinkles ironed out surrounds the digital pound. The central bank digital currency conversation is always a tricky one, with critics inside and outside the crypto industry questioning the fundamentals of the idea. However, the digital version of sterling is still a while away from becoming a reality.
So the Bank of England has been very proactive, which has been fantastic. They have asked for consultation from those in the industry, etc. So they've been very, very open and pragmatic about their approach. And as a result of that, I suspect we'll end up with something which is great once it's done. I'd say it's still 18 months or 2 years away in terms of the digital pound coming through, but I suspect what it will mean for the overall industry is it probably legitimizes the space.
Proponents of the technology see it as just another needle mover for the industry as a whole, particularly for attracting institutional interest to privately issued stablecoins, which it would seek to complement and legitimize rather than replace.
If you have a Bank of England or a Fed type of stablecoin down the track, that would be great. I think that will legitimize both private stablecoins, and the Bank of England has been very open about that. They don't want to replace those, but rather drive more activity in that space by having the digital pound.
In the evolving world of crypto, can the UK emerge as a leader on regulation and adoption of digital currencies? Or will politics push the country's leap into digital assets to the back burner? That's something only time will tell. For Forkast, I'm Will Fee.
Well, that's a wrap on this week's show. Thanks for tuning in. And remember to like and subscribe to this video if you're watching us online. Always appreciate that. Or stay right here, tuned on this channel, if you're watching from home, the trading floor, your office. It's easy to stay connected with Forkast for the latest developments in the world of crypto and Web3. I'm Forkast Editor-in-Chief Angie Lau. It's great to spend some time with you today, and we'll see you next time. Forkast IQ, get intelligent in Web3.